Hello and welcome to Business Today Television. I'm Siddharth Zarabi and with me now is Dinesh Kumar Khara, the chairman of the State Bank of India. Welcome, Mr. Khara. The quarterly performance and the numbers, profit down at 9,164 crore on account of a one-time exceptional charge of almost 7,100 crore. Beyond that, how do you read and explain the financial performance in the recently passed quarter?
Thank you very much. I would like to thank you for having me on your channel. And also, when it comes to the highlights, our net interest income for the quarter third has increased by 4.59% YOY. ROE stands at 0.94% and ROE at 19.47% for 9 months, which is actually up by about 88 basis points as far as the ROE is concerned. But for this exceptional item, this ROA would have been 1.06 and ROE would have been 22%. We have been consistently delivering ROE in excess of 15% for last 6 quarters onwards. We are observing robust growth across all the segment of advances. And all the segment of advances have clocked double-digit growth. Corporate book has crossed 10 trillion and SME book has crossed 4 trillion and the retail book has crossed 13 trillion. Gross NPA is at 2.42%, which has improved by 72 basis points on a YOY basis. And it's the lowest level in more than 10 years. Net NPA stands at 0.64%, which is also an improvement of 13 basis points on a YOY basis. Also, our digital platform is doing very well. We have almost 95,000 crore plus advances have been sourced using the analytical leads, which is actually a growth of 37% on a YOY basis and is a reflection of our commitment for scaling up the digital capabilities.
Mr. Khara, do you continue to expect that you will deliver the same kind of outcomes as far as NPAs are concerned, because you spoke about it being at the best level in almost 10 years?
I hope to continue at this level, and I've not talked about our credit cost, which is actually 0.25, so which again is one of the lowest. So I think the way we have strengthened our underwriting practices, the way we have streamlined our collection processes, and also the way we do the control and follow-up of our loan book, we are quite confident that we should be in a position to have similar outcomes as far as our asset quality is concerned.
Mr. Khara, what's the outlook as far as the loan growth is concerned? Because there is strong and broad-based loan growth, almost 14% on an annual basis, with domestic loans up 15%.
Yeah. So in fact, we are seeing growth in all the sub-segments, right? From retail, SME, agriculture, corporate. So we are seeing growth everywhere, and even in corporate also, it is a double-digit growth which we have seen. And we have a very clear visibility in terms of the pipeline, which is almost to the tune of about 4.6 trillion. And I expect that we should have the strong growth as far as the loan book is concerned. And even in the international space also, we are growing at about 14-15%. So that also offers us a decent opportunity to grow.
As far as the future is concerned, is there a sense of caution as with regard to the loan book growth, and are there any concerns, especially on the unsecured side?
No, our unsecured, I have said it in the past, is actually better than our secured book. And it has the gross NPA for our whole of retail book is less than 0.70. So that is something I'm quite confident about the quality, and we don't envisage any challenge as this quality is concerned. It is essentially because the kind of basket whom we offer these loans are the one where we are having the salary accounts. So that is something which is there. So I'm quite confident that we should be in a position to maintain this kind of a quality, or maybe we can improve it a bit also.
All right. Mr. Khara, since we are speaking after the latest decision of the Monetary Policy Committee, I want to take a few questions on that. But I'll start with the point about loan processing fees, documentation fees, and other charges that the central bank has said need to be loaded into the actual interest rate. What is the likely impact of this going to be on the industry? And if you can also talk about what it means for your bank.
No, I think it is essentially an effort on the part of the regulator to ensure that there is enough transparency in terms of the commercial terms on which these loans are being offered. So I think it will ensure that it is uniformly declared by all the participants of the industry. And to that extent, it is to the advantage of the borrower. It will be very, very transparent mechanism which will be followed by various participants of the industry. So I think it's a very welcome move, and it will ensure that the borrowers are adequately informed in terms of what are the terms of the loan. It is not merely the interest rate, but it is also the fee income, or maybe the fee for covenant breach, etc., etc. So all such kind of details also will be very clearly documented. So I think it's a very welcome move.
As far as the overall decision of the MPC with regard to continuing to hold rates steady and pretty much not changing anything, including the liquidity picture, what is your view on that?
I think it is more or less in line with what the system was expecting. So the policy stance and also the rates have remained at the same level. But only positive is I'm sure it will really help in terms of ensuring that the inflation trajectory gets lower down, and which eventually will create a climate for the potential reduction in the policy rates.
When you say potential reduction in policy rates, between the last time that we spoke in January and now, has your expectation changed as far as the possibility of a likely reduction?
No, I would still expect that the kind of trajectory which has been talked about as far as the inflation rates are concerned, my expectation is it should be the second or the third quarter of the next financial year.
Mr. Khara, we also saw a pretty pragmatic and well-founded set of numbers, including the borrowing numbers and the fiscal glide path that was outlined in the budget, and we now have seen the MPC. With these two events past us, what would you say will be the key focus in your view for the markets and other stakeholders to look out for in the April review of the policy?
Well, I think the kind of fiscal consolidation which is reflected in the budgetary announcements, and also the very clear focus on inflation trajectory as indicated by that is the Bank of India in the recent policy announcement. That very clearly is a reflection that perhaps we'll get to see the market interest rates moving southward. So that is something which I would say that it will augur well for economy, because it will actually create even more enabling environment for the growth. And also the growth estimation also has been upped. So I think it is a very clearly Indian economy is poised for even better days. And the inclusion of into the global bond index will also create positive trajectory for attracting global investment in the economy. That's how I read the situation.
Mr. Khara, on the liquidity front, there are some voices which expected a little bit more to be done by the central bank. It's pointed out various things in that context. Today, what is your own view on that matter?
I think central bank is ensuring that there should be enough liquidity in the system. And I think it will go a long way in terms of ensuring that there should not be excess liquidity, which can potentially fuel inflation. But at the same time, they would like to have adequate liquidity so that the growth initiatives of the economy should not get hampered. So I think to that extent, they have done a very exceedingly good fine balancing.
Perhaps the markets were expecting more on that count. Mr. Khara, before I let you go, today the SBI stock hit a new record high. There were some reports of dilution of the stake in Yes Bank. For the record, what would you like to say about that?
That news is baseless.
Okay, that news is baseless. That was a pretty sharp and crisp answer, Mr. Khara. I'm going to thank you at this stage for taking out the time to join us for a quick snap on the recent quarterly performance and also your views on the latest decision of the Monetary Policy Committee. Mr. Khara, thank you very much as always for your time with us today. Viewers, with that, it's a wrap on this episode with the SBI to decode the financial performance. We'll be back with more. Until then, goodbye.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-risking the Future in collaboration with Business Today.